This is Pre-Market Prep. I'm Brianna Valesky here with Joel O'Connor, Garrett Cook, and we are joined by Blake Morrow. He is the Chief Currency Strategist at Wizetrade. Blake has more than 18 years of trading experience, has been a co-owner of a Dallas-based brokerage firm and LiquidTrader Technologies. He does analysis for thousands of individual traders on his Morning Edge webinar for 2 hours each day. He also appears as a regular analyst on Wizetrade TV. Blake, is there anything you don't do?
Yeah, I don't do a lot of laundry around the house. I try to avoid that.
Well, that's okay. If you've got enough clothes, you don't need to do it that much. Thanks so much for
Good morning.
joining us this morning. Good morning. It seems like we can't not talk about Greece. I mean, it's like what they just keep pushing back the deadline every time they can't come to an agreement. Creditors are pushing for more austerity. Greece doesn't want it. If Greece doesn't leave, are other people going to follow? I mean, what's your take on this Greek drama?
Well, thanks for asking, and thanks for having me on, Joel and Garrett and Brianna. It's interesting. We had a Greek economist actually on my daily webinar yesterday, and he's from Athens, and gave us a really good boots on the ground explanation of what's happening in Greece. And there's obviously a lot of drama happening around the government and what the government has promised the people of Greece, the Syriza government, and what they can actually deliver. So they gave the Greek people a lot of different promises. They went basically to the creditors, and you can call it the troika, if you will, and they demanded this, that, and the other thing. And the creditors are basically looking at Greece saying, "Hey, listen, your previous government agreed to this, and we're gonna stick it at that, and we're gonna stick with that, and we're not really gonna budge a whole lot. But you have to make these certain reforms, whether it's taxes, pension reforms, whatever, really to get another tranche of money." And this is where the problem lies, is because the Greek government obviously promised the people that they were elected by that they were going to deliver something that was really undeliverable.
Right.
So now you've got a situation where the Syriza government's going to have to go back to the people, probably agree to, in principle, an agreement that's going to have no concessions, because if you're the creditors, you can't obviously make any concessions on the money that you've lent out, because if you do, this is a template for the rest of Europe and the rest of the periphery, whether you're talking about Spain, which is probably the bigger issue. But you can't do that, and because Spain will put their hands out, and you guys know the whole story. But the problem with the Greek government is now you're going to go back to your parliament this weekend, more than likely, because now we're getting down to crunch time. You're going to have to go back to their parliament, and the parliament, which a third of the Syriza government is, for lack of better explanation, they're basically communist party that joined Syriza to be to be elected. They're going to vote against anything that has no concessions in the debt relief. So you already got a third of parliament that's basically going to vote against this as it comes in to pass over the weekend. And something's got to get done before the 30th, which is on Tuesday, which the big payment to the IMF is due. So it's a real pickle. And because of that, actually, I was just short the euro yen overnight. I was literally up 100 pips. I woke up at like 2:45 this morning, as I normally do. And by the time I could wipe the sleep out of my eyes, I had lost most of my profits, and then I closed out with a small profit. And at that moment, I decided myself, I think I'm going to steer clear of the euro until after Tuesday, because there's going to be a lot of great opportunities in the euro dollar, whatever the outcome is, which we're going to find out in the next couple of days, I'm sure. There's going to be a lot of great trading opportunities in the euro dollar and in the markets. I think the more conservative investor, maybe you can put myself in that classification, will be sitting on the sidelines for the next couple of days, waiting for the opportunities to arise, because there's going to be plenty.
So, Blake, what's going on with the euro dollar? I've been seeing it looks like there's kind of been a reverse since the March 16th lows. We're making pitches that when I draw with a trend line, we're getting higher lows. when we were watching yesterday as the Greek headlines were coming out, they were buying this thing, on the fact that there was no deal. I mean, what do we make of what's going on in Euro USD? Where do you see it going, and what do you make of this reversal so far this year?
Well, first of all, the euro is a very interesting trading animal right now, and I think you have to look at the euro the same way that you kind of look at the equity markets. The equity markets they're glass half full type of people. I mean, anybody who's trading the euro and anybody who's trading the S&P or the broad markets in general is making the assumption that in the 11th hour and 59 minutes, Greece is going to come to an agreement. The brinkmanship will show through, and something's going to get done. We're going to get the can kicking, the ultimate can kicking again for another year or 6 months or 2 years or whatever. Something's going to get done, and with that being said, I think the euro's propped up on that. The euro has found some pretty stiff resistance in the 114 area, and you really have to go back. We have to actually go back all the way to. You'd have to go all the way back to actually 2005, and we have some previous support around the 116 area. So this 116 to 114 is going to offer some really good resistance moving forward. I have to assume that any positive developments over the next week will put the euro back at least in the 114 and maybe even slightly higher. But me personally, I look at it as the divergent central banks really is the overarching theme. Greece is the noise, and unless the wheels proverbially fall off the bus over the course of the next week, which again that's going to be a worst case scenario, not most market participants' base case scenario. Unless something like that happens, the game has changed. But if things they work through some sort of agreement, we're probably going to get a new Greek government in the next year again. For the 1,000th time over the last 10 years, we're going to get probably a new Greek government, but the can is going to get kicked. The markets are going to then refocus back on central banks and realize that the ECB has their hands tied, and they're going to have to stay loose for longer. The Fed's going to be eventually raising rates, so the euro is going to eventually turn lower, maybe around 114 to 116. Those are the levels that I'm really looking at it. And really, Garrett, if and that's such a great question, because on the downside, I mean, if we take out like the 110 level, those higher lows that you're talking about, that's where we start really breaking that pattern. We start breaking some pretty big trend lines. And if we break below 110, I have to take the assumption that nothing's getting done. We are now looking at maybe the worst case scenario versus the most people's base case of something's going to get agreed to. If we start breaking through 110 in the euro dollar, I think it's going to be probably pretty bearish. We will probably retarget the lows that are around 105.
Yeah, not to beat the horse any further, but the way I'm looking at it with the trading, at least, it looks like Greece is actually going to try to roll through June 30th. They're going to try to default, maybe scare some of the creditors and the rest of the market a little bit. They do have a bond that's coming due on July 14th, and then it looks like they'll probably give into the game theory attempt here to make the world think that they're crazy, and then they'll accept a deal on, I think, the 20th of July. That's the way it looks with the trading. I can't understand why this currency would keep appreciating in the face of no deal and all the problems they're talking about. It makes no sense.
No, I agree, and again, I think everybody has that assumption. Not necessarily your exact thesis, but I think everybody really believes that that no one in Greece or no one in the government of Greece is really going to push Greece over the edge. They all understand that if Greece defaults, the hell to pay, there's going to be a lot of hell to pay, because now you're talking about, if they stay in the EU, if you run a parallel currency, and they reinstitute the drachma, if the state is paying pensioners and state employees, which having the Greek economist on yesterday, a friend of ours named Steve in Athens, he was wonderful because he really outlined the Greek employment picture. And when only 1/3 of the working Greeks, which out of 11 million Greeks, 1/3 of the working population is private sector, just a really, really small private sector for a country. Everybody else is, you're talking about working for the state and whatnot. And so when you go to a drachma and then no one's you get all these people, all these Greek citizens that are getting paid by the state in drachmas. No one wants drachmas. Everybody's going to want the euro. So massive inflation is going to hit Greece, and it's going to be ugly. So I don't think anybody believes that the government is crazy enough to push the Greek state over the edge, if you will. So I think everybody's working on that. Like, yeah, they're going to think they're crazy. They're going to push it right to the very last minute, and that's keeping that bid in the euro, because I think everybody wants to be around for that party when everybody cheers that, hey, Greece is saved once again. I think everybody wants to be on board, but I think the celebration will be short-lived in the euro. I think a spike up in the euro will be sold into, at least by me it will be. So
let's give our listeners some relief and shift away from Greece. Our last guest, but thank you, your thoughts are incredible. Our last guest mentioned that he was watching the long U.S. dollar versus the Japanese yen. Are you watching this trade too, and what are your thoughts on it?
Actually, I'm short the dollar yen. I've been short for the last 2 days, and I'm short about the 124 handle. There's just been some technical setups that have been developing that has allowed me to be basically long some yen. We've seen the divergence between the Nikkei hitting new highs. The dollar yen has not. Some of these other yen pairs haven't. Typically, when the Nikkei moves higher, the yen weakens. And so when you're seeing that divergence, I tend to play that divergence quite a bit. And so I've actually established a short dollar yen trade just in the near term, because I'm more concerned about the S&P, where the S&P is right now, and I think being long some yen is not a bad hedge, just in case the markets do continue to pull back here. And if they do, I want to have some long yen exposure. So I'm actually on the other side of that. The other person, I'm not familiar with who that was or what he had said, but that's my take on the dollar yen right now.
So since you mentioned the magic word about the S&P 500, how do you think the markets are looking right now? I noticed a chart you had shared yesterday. I believe it was from one of your users in the Wizetrade chat, showing that the S&P 500 was just maybe 4 points off its top fib, and it looked like the MACD was breaking down really heavy. That correlates to previous breakdowns that we had. What's your view? Do you think we're overextended here? Do you see a pullback? What are your thoughts here?
Well, and that's a great question. And the person that actually sent me that chart is an analyst over at CMT Markets, and so he and I, we follow each other quite a bit. He's French speaking, so I can't understand half the things he tweets, but I do understand his chart. And so when he sent out that chart, I said, "Wow, that's a great chart," and I gave him credit to it. And I was also looking at relative strength. On a monthly basis, you're right. The S&P has reached 161% extension of the pre-financial crisis, post-financial crisis move. So the highs in 2007 to the lows in 2009, we basically came within 4 points. And when you're talking a monthly chart, when you're within a couple of points like that, you're basically there. I mean, you can't really argue that. So what I suspect is any rally from that's any benefit that we see from the resolution of Greece, let's just assume that Greece is once again saved. I think we can retest those highs again, but we're at such a major level that on 161% extension. I'm a big Fibonacci person, and my mentor from 20 years ago was really one of the pioneers in charting fibs, and has done it professionally for many years for a lot of big brokerage firms now. And he taught me basically on 161% golden fib. I almost universally fade those moves. And so when you're looking at the S&P, that's really had a hard time getting above it over the last several months. My assumption is, and I probably won't necessarily short the S&P, but I'll probably trade, in currencies. I'd probably be long yen like I am right now. I'd look to fade some of that strength that we might see. And I think that the stock market is up at some pretty key resistance. It's going to be hard to overcome, especially in the face of the Fed looking to raise rates this year. I think that that's probably going to be the the last nail in the coffin, if you will, in the market.
Blake, we've got just a few minutes left with you here. Any final thoughts on the global and overall market right now?
Well, thanks for asking that question, because I think for traders, like intraday traders, it's very lucrative. There's a lot of opportunities. For those of us that like to take establish a little bit more trends in the markets, I think we really have to stand aside for the next week and a half or so, week to week and a half, and really see what pans out in Greece. I think the overarching theme of the Federal Reserve looking to raise rates this year, and central banks like the RBNZ, you got the Norges Central Bank, you got the European Central Bank that's going to continue to finish its quantitative easing program. It's probably going to stay low for longer, especially if Greece does stay in the Eurozone. And even if Greece comes out of the Eurozone, you're going to have an ECB that's going to be very cautious moving forward. When you talk about the central banks that are really looking to raise rates, you got the FOMC, and you got potentially the Bank of England sometime in the next year. But at the same time, you're looking at the UK's membership to the EU is in question as well. So really, when you get rid of all the noise, the overarching theme at least in the currency market is the Fed's probably going to be raising rates this year, at least once, if not twice, and that should continue to support the dollar against most major currencies. And I think the only currency other than that it may not may be the U.S. dollar, Japanese yen, especially if the Bank of Japan decides that they are finished with their own quantitative easing experiment. And if so, the yen could maintain some strength as well. And I think there is a lot of noise in the market, and so you have to just kind of brush that aside. I know it's easy to get wrapped up into it, but take a look at the broader scope of what's happening with central banks, because ultimately interest rates and interest rate expectations are what move currencies.
Great advice from Blake Morrow. He's the Chief Currency Strategist at Wizetrade. Blake, thank you so much for joining us this morning. We always appreciate your insight.
Well, thank you for having me on, you guys. You guys have a great, wonderful trading day.
Thanks. You do the same.